Hello everyone, I am Vishal Periwal from IDBI Capital. We have released stock preview research report for Q4 of FY22. In the report, we highlight that there is an expectation of muted Q4 with commodity producer could see an earnings upgrade and commodity consumer could see an downgrade. However, lately, even commodity consumers, which include cement, consumer staple, they have announced a price hike. And thus, we would like to watch how the management commentary is on the demand particularly. Now, as we are entering Q4 result season, consensus expectation is 18% EPS growth for FY23, and thus this is a key element to watch in terms of how this particular number pans out at the end of Q4 result season. Now, currently sector-wise, IT, oil and gas, banks could post better than estimated results in Q4. Now, if I go sector-wise sector, our read through across the sector is as follows. Now, coming to the first, automobile. Now, auto companies are set to witness yet another quarter of soft earnings. The export, CV-oriented business models are expected to report relatively better performance compared to domestic-oriented OEMs and ancillary companies, which are expected to report soft performance. Second is banking and finance. Seasonally higher disbursement and better collections are observed during Q4. And for this fiscal, we are expecting the same. Credit growth remains strong sequentially during Q4, which is reflecting in provisional figures of the bank. Now, asset quality is expected to improve as NPA formation during the quarter could decline along with a better recovery and upgrades. Next is cement. Now, cement companies EBITDA per ton to see an increase on quarter-to-quarter basis. This is led by better volume and price hike in the east and south region. Now, coming to the next, which is construction. If you look at construction wise in Q4, road construction in lane kilometer is down by 24% on Y-on-Y basis, but awarding is higher by 26%. So we are expecting that revenue growth for the companies to be flattish, margins could be weakish, but inflow could surprise on the higher side. Now, coming on the next sector, which is metal and mining. Now, during Q4, prices of raw material rose sharply, and this is likely to hit the margins of steel company. Now, in Q4, domestic HRC prices remain flattish on quarter-quarter basis at 67,000 per ton. But at the end of quarter, the prices rose to 74,000 per month, which means like Q1 of FY23 could be better for metal and steel and metal. Now, coming on the next sector, which is IT. Now, despite seasonally weak quarter, lower working days and higher base in previous quarter, we expect Q4 to be relatively strong. Now, coming to the next, which is consumer and retail. Now, consumption during January of 22 was weak. However, business recovery in the month of February and March has been robust due to festivities. Now, price hikes to drive revenue growth in FMCG and paid, this is our base case understanding. Now, coming to the mid-cap, we expect most of the mid-cap company under coverage to report improvement in their top line on Y-on-Y basis in Q4, led by either volume growth or price hike. However, rising prices of key input is lead to fall in the margin for most of the company. Nevertheless, we expect most of the company will be able to have a better margin as they have started doing a price hike starting from Q1 of FY23. Now, to conclude with, our top pick in the sector is as follows. Large cap, Infosys, ICICI Bank, Avenue Supermart, Jubilant Food, Estel. Now, if you come to mid caps and small cap, it's Sonacom, Manappuram Finance, Birla Soft, EPL Apollo, PNC Infratech, HG Infra, Chalet, Safari and SGS Enterprises. Yeah, that's it from my side. Thank you.